All right, hi everybody. I am here with Paula Clark from Canopy Mortgage. Now, Paula, tell me how long you've been doing mortgage lending.
39 years.
Wow, so you've been just a little while, right? You've
Yeah.
sort of seen a lot of markets.
Yep.
You've probably seen a lot of different interest rates and things like that as well. So,
Yep.
you know, a lot of my clients are talking about this right now, and I'm sure you're hearing the same thing. Interest rates, we know they've gone up. They've announced it. If you haven't seen that already, if you're in the process of buying, you know that unless you've locked your rate, it is for sure going up. So that's something obviously that we can't deny, and we can't, you know, there's no two ways about it. Interest rates have gone up, and they're probably going to continue to go up. But I also want to talk about, you know, kind of what that means in the long term and historically. So what are your thoughts on interest rates right now?
Well, I mean, my first house was a 14.5% interest rate, so rates are still great. I mean, yes, they've gone up in the last year, and they are forecasted to go up a little bit more because of inflation and because of supply and demand. And but it's still a great time to get into a home. The faster you can get into your own home, the better, to take advantage of lower prices and lower interest rates.
Yeah, so I mean, I bought a little bit later than you did, but late 90s, and my first interest rate was in the 60s, and we thought it was a great deal.
Yeah.
I mean, we really did. So, I mean, when you compare it historically, we really are talking near historic low rates.
They are so low. I mean, you know, most of my career, they've been higher than this. I don't think I hit 6% till my fourth house. So, I mean, rates are great. And owning your own home is great. You get to take advantage of the appreciation in the market and really grow your wealth and plan for your retirement by owning your own home.
So if somebody's kind of sitting on the fence, they've been renting for a while, I mean, that's a whole other conversation, is rentals and what's happening with the rental market and how much it costs to get into a rental now. What are some things that you tell them about, you know, why is it worth it, and what are some things, strategies you've seen to help people get into a very competitive seller's market?
Well, as a lender, we're not only getting people pre-approved, which is running their information through an automated underwriting system to issue a pre-approval, we're helping our potential buyers be totally approved by a live underwriter and issuing them an approval letter. So that the sellers know that they are not just pre-approved, they have been vetted and they are ready to go and they're fully approved. We just need an offer accepted. I mean, there are down payment assistance programs. However, in the last 4 years, those interest rates have grown to a point where I really encourage my buyers to look at alternative places to get their down payment, such as borrowing from their 401k. You don't have to pull money out of your 401k, but you can borrow money out of your 401k to use that for a down payment to purchase a home. And you pay yourself back in your paycheck over the next 5 years, and you won't even see it. You won't even miss that money. But you'll be in a home, earning appreciation, you know, taking advantage of your house growing up in value and having that joy of home ownership.
Well, I really appreciate all that information, and if you have anybody that is interested in learning more, how can they contact you, Paul?
They can call me at 702-277-3554, or you can go onto my website, which is canopymortgage.com/Paula Clark.
Thanks, everybody.
Bye.